Welcome back to Cryptocurrency Trading, Mastering Scalp Trading Strategies by Wealthy Education. In this video, we'll take a look at some examples on how to scalp using support and resistance levels. So I have Ethereum in front of you, a 5-minute chart, and we will kind of look and see if we can find support and resistance levels. You can see the market peak there and kind of pulled back. So that's something to pay attention to. It has offered a little bit of support here. Let's see what happens at 1880. And you can see the 1880, it looks like support here, resistant. And then it's more important over here, it seems. And you'll see that from time to time where, a level becomes more important later and less important later than that, et cetera, et cetera. So you can see what I'm looking at here. Sometimes, especially in these short-term charts, maybe you need to tweak the charts a little bit or tweak the levels a little bit. So like maybe 1894 is a little bit closer to reality instead of 1895. So now we've got a situation where we have a couple of clear areas of the market being supported and the market being resistant. Now, so it resists going above and there's support underneath, as we had discussed in the last video. And so here's the thing. How do you approach this? Well, you approach this knowing that at least in theory, there should be some trouble getting above this area. You also need to know that it's probabilities that we're dealing with. This isn't a 100% guarantee. But as we plunged here, and you can see clearly we are seeing a lot of selling pressure, a lot of volume comes in right here, and we bounce. Now, this in and of itself is a buy signal because it's at a previous support and resistance level, and we formed what is known as a hammer. And, we'll certainly start to talk about certain types of candlesticks later on down the road. But for now, just know that's a candlestick formation that some people look to. But what I would find more interesting is with all of this selling pressure, and this was an area that previously was resistant, when we come back, it respects that area again and it falls. So for me, the interesting trade more than anything else is to be a seller here, not to try to catch this falling knife and turn things around. I mean, clearly you could have made money, but it's much easier to go with the overall attitude of the market, and you start to look towards this area to clear your trade out. Furthermore, I would also postulate that if we do break above, once you get short, betting against the area, a couple dollars above, if it breaks above there, then it's time to bail out. You get out of that trade. It doesn't work out, and it is what it is. One of the things about trading a scalp strategy is you desperately need to be very quick to dump a bad position. Okay, so Solana, it's at $22. Oh, no, let's make that, I bet it's closer to $21.50. $21.95, sorry. Here we go. So you see there's some resistance there, and you could probably even clean this up a little bit and just say, okay, somewhere around 21.90, there's obvious resistance. Has it been important in the past? Yes, it was important there, and we flipped back and forth. It was minor there, it was much more important there. Is there an area where the buyers continue to come back into Solana? Certainly looks like somewhere around here we have some interest. Notice that the market broke down pretty significantly, and this is what would be known as a failed breakout. Solana was in a downtrend and it broke below, and it probably would have had a lot of people interested in shorting. Well, once the market comes back up into this area, you have to keep in mind those people now have to deal with the fact that they're on the wrong side of the trade, at least temporarily. Traders probably bailed out, pushed the price back up, and now we're having a fight as to whether or not we short. If you do choose to short it here, bet on price going lower, you would put your stop loss somewhere like over here, just a little bit above, and you aim for this area here. Another way is you can play the breakout and you can say, all right, well, let's give this a couple of cents. Let's just say $21.95. If we can break that, then maybe I'm a buyer. Here's an area where the market wouldn't break above 2 candlesticks in a row, so you could even say $21.97. If we break above there, well, then where would I look? There's an argument to be made for this general region here. So to be about 13, maybe 15 cents. Once we break above there, your stop loss goes a few cents underneath here, and it is what it is. It either works or it doesn't. That being said, there are some ways that you can put the odds a little bit more in your favor, but we will get to that later. So here's an area where the market just took off from, and we find ourselves in that same general vicinity. It was pretty messy, but the fact that we pulled back and then shot straight up in the air like that does suggest that it's going to cause a little bit of noise. And notice, it did. You could have been a buyer there looking for value, but you also have to recognize that there is support there, and that support later becomes resistance. When I look at this chart, I see a chart that when you look at the longer term chart, it has been negative for quite a while. And most certainly on the weekly chart, it's been negative for a lifetime here. Going back to the higher time frames, you can see that's exactly what happened. We hit support there, and then it became resistance. So the question is do we go back to the bottom? That's what you would look at if you were like a weekly or a daily trader. 5-minute chart, you're looking for an obvious place where it could go. It could go right here where we previously had seen resistance. That should be support now. So on a break below here, you'd be aiming for that stop loss somewhere in the middle of that. Or if we break above here, and it does truly continue to try to reverse, somewhere around 46 cents would be your target, your stop loss, a cent or two below your entry. Pretty straightforward. You do want to see some type of volume on a breakout or a turnaround, but it's not the be-all, end-all. So, for example, when you see a massive volume spike like this, that shows a lot of noise and indecision. But we pulled back, we found support here, and then saw volume spike again. Well, that gives you an idea that we may be going to the next level. The problem with this particular setup is that the candlestick was so long that you were risking like $3 to pick up one if you measure your risk to reward. Nonetheless, these are the signposts you need to pay attention to. We'll get into adding more to it, and support resistance will be brought up in almost every video I do, especially when you are talking about examples of trades. In the next video, we'll talk about Fibonacci retracement levels.